All right, guys, we are back. We are back again. We had some technical issues, but I'm glad to know that we are back. So, if you're joining in, just get to the Q&A. We'll have a Q&A today, so you want to make sure that you're aligned and you're not missing out on anything today. Today we're going to look at Post-Fomc and what happens after the remainder of, well, we had Fomc on Wednesday and we have approximately 2 weeks to the end of the year. So we want to look at how best to trade these remaining days. And there's no better way to share with you knowledge than to also get your feedback. So if you're tuning in, just do me a favor and hit the like button or subscribe or even ask some questions, right? You want to ask questions, guys. That's the only way you learn, and giving your feedback is very important. Wonderful. Now that we've sorted the technical issue, and we are now moving in. So today we're going to dive into the mechanics of the Fed rate cut. All right. It's a global market impact, right? And what generally is 2026 going to be like, in my opinion? Of course, we are to some level speculating, but we try as much as possible to use the data that we have and make informed decisions. So from our lens, we will look at macro driven, multi-assets and global awareness. If you want to trade like institutions, you'll need to understand flows, you'll need to understand seasonality and structural changes, all right? Not just chart patterns. So if you've noticed, if you've been here for a while, remember this is we're a little bit under 20 live streams, so that is a good start for Q3, Q4. And if you have been listening, if you've been tuning in to my Friday live streams, you'll realize that I mix a lot of strategies. I come from an experienced perspective. Usually I'm not consistent with only one kind of paradigm in this field, but I'm always dynamic, I'm always fluid, I'm always changing. And this is a very unique skill that many of the experienced traders that have been here for a while are able to adapt, right? And it's something you can only learn by practice. And we are here to make sure that you kind of get the feel of how best, to jump on some of these waves and capitalize on them. And as you already know, it's strategy is one thing, but the psychology behind pressing the buy and sell button is way different. You need to know when to accelerate, when to break, how to taste the waters, how to position yourself, how to exit, to enter. There's so much that goes on behind, and we've talked about this over and over in some of my psychological videos, trading psychology. You go check that out. I've just released some good episodes, and I released the demarker. Well, I've been looking at a lot of indicators lately, but indicators are more about newbies. If you're stuck, you don't know what this indicator does, what it's up to, well, you could go there, check that out for the technicals. However, there's a lot more in regard to the fundamental aspect and so forth. So drop a live and ready comment in the chat if you can hear me well. And I want to ask, who likes trading the US session, right? Type of region. Where are you coming from? Are you in Asia right now? Are you in Europe? Are you in the States? Are you in Africa? It would really help understand who joins the lives. Now, before we even get started, I want to share this promo code with you. You could use the T stream to get 100% bonus on your first deposit. You see, we're talking about Fed cuts, right? So I'll just open my calendar here. We had, so today's 12th. And if you've been very critical enough to check out what has been happening this week, we had quite a lot of interesting news releases. We had the RBA rate statement for the Australian dollar. We saw some volatility, and then ADP came in, right? We had the Central Bank of Canada rate statement coming in. You saw those numbers as well. We had the Post-Fomc. This was a highlight on Wednesday, whereby we had a rate cut as assumed from 4% all the way to 3.7%. Now, the question is, how do you combine some of these regulatory trends and liquidity-driven trading tactics? What is the essence behind these news releases? So, when Fed cut immediately, what really happens on a short-term perspective? We have FX being affected. We have equities, risk on rallies. We have bond yields. These are short-term rate drops. On the medium-term impact, we have the yield curve adjusting, and you'll see that shortly. We also have volatility clusters in low liquidity periods. And I want to draw your attention to what's happening on the alt season. You need to keep your eyes very close on what happens across all these baskets, right? All these asset classes. What's going on? We have 31%, all right? If you look at the top performers and let's say market capitalizations, you want to ask yourself, what is the latest price in Bitcoin? Because we understand now that Bitcoin actually moves quite a lot. When we see a decrease in Bitcoin, a lot of assets are affected. And this is very logical because we have money being transferred. If you're looking at let's say the Forex market map for the day, you could see what's happening. Performance leaders. So by going through some of these tools, these are open free source tools. They shouldn't be coming in for some kind of subscriptions. But the point I'm trying to make is, by understanding where some of these assets, where the money's coming, where it's going, how is the stock market doing, you'll be able to kind of get a feel. Now, when you look at long-term implications, I always like to break my goals into short-term, mid-term, and long perspective, right? We have Fed pretty much signaling caution, indicating limited cuts ahead. However, the stance of the president about reducing the rate up until 2 probably will come into impact in 2026. The market may overprice, easing opportunity for smart traders. So rate cuts long term are very reactive. They are not preemptive, right? So you need to watch inflation. Fed fund rate chart is another nice tool that you want to check out. And I want to ask you a question for those of you that are the advanced group. When the news came out on Wednesday, what was your reaction like? That is the first question. What is your reaction whenever you see such kind of news releases? And do you think the Fed will cut further in 2026? We'll discuss these implications in my channel if you're up for a debate, or you have some perspectives on this. You want to share your opinions. That would be really nice. All right. So we're going to look at some of the pairs. We had the GBP USD. If you go to the daily, well, we had overall we have this long retracement coming back all the way from the high, and we're starting to see some kind of move to the upside. If you're looking at Euro USD, we have a choppy market, but on a daily we have that push. So this week was slightly push, right? We were pushing up. Gold as usual. Gold also had a very nice chart with some volatility, and this was going all the way down. All right, now wherever you're coming in from, all right, you want to check out your clock. It's about 8:39 a.m. in New York, and we're always looking for that hot spot at 9. Now, the current target range is 3.5 to 3.75%, right? Markets react more to nuance in language than headline cuts, all right? Watch words whenever you're hearing these public speeches, public announcements. If you're looking at Powell, what Powell is saying, you want to look for some of his words because they choose their words very well. You want to be aware of how to tell whether he's dovish. Words that, things like moderate pace, if he says ongoing assessment, these indicate cautions. They indicate cautious positioning, not aggressive easing. Now, if you go to the official website, which is a Federal Reserve, what you want to do is go to events, press releases, and check out what really happened on Wednesday. So Wednesday was the 10th, right? You want to go right down to the 10th and see what really happened. Go to the previous, and you could already start to see that we had announces expanded operations, minutes of the board discount rate. We had, so it came in pretty late, and former Twitter, which is X, was on fire. You could see some of the handles that I suggested that you follow. Now, when you come to the release, you could see that the summary here, I'll just read it really quickly and give you an overview of how I interpret it. So, available indicators suggest that economic activity has been expanding at a moderate pace. Remember, moderate pace, right? And these words, you might have them journaled somewhere so that next time they come out, you have an idea. And you could use any kind of tool to search for some of these words. So these kinds of statement, these indicate very cautious positioning, like I mentioned, right? Not so much of aggression. So you want to keep your eyes on that. When you say job gains have slowed this year, right? And the unemployment rate has edged up but remained low through August. More recent indicators are consistent with these developments. Inflation has moved up since earlier in the year and remains somewhat elevated. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the long run. Uncertainty about the economic outlook remains elevated. We have the committee is attentive to the risks to both sides of its dual mandate and judges a downside risks to employment rose in recent months. Now, there's a lot you could go in here, but I'm more curious to see what happens with the numbers. So, in support of its goals and in the light of the shift in the balance of risks, the committee decided to lower the target range for the federal funds rate by 0.25%, right? Point to 3.75% to 4%. In considering additional adjustments to the target range for the federal funds cut, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. The committee decided to conclude the reduction of its aggregate security holdings on December 1st. Committee strongly committed to supporting maximum blah 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 blah, right? So by reading this, you already kind of gauge, you understand the sentiment, and now you want to go to the data side, right? Now this is for those of you that are into econometrics and you like to build models. You want to have your little indicator that kind of gets out all the data, filters it, and then you deploy some kind of strategy. But that is very advanced for mainly quantitative traders out there. And if you're really into that kind of stuff, DM me. I'd love to share some more with you. Now, if we look at the simple side, you go check out the Bureau of Statistics, all right? Economic releases, latest releases, and you want to check out what's going on over here. So far we just had consumer price index, and we went through all this last week. Now, data tools, you could play around with this. This is a really nice source. You could play around with data finder, series reports. I talk about this a lot because honestly, this is the only, if not a free source, where you could get it. But since it's a lot of work, a lot of reading, many people, especially even advanced guys, don't really like to crunch these numbers, but they really pay a lot. Imagine you have some of like the 5 top indicator movers, and you could actually start to make very well informed decisions if you're looking at the long term. Now, anyways, enough of that mumbo jumbo. We want to look at Fed cutting. Fed cuts are short-term catalysts, all right? Don't forget that whenever you see a Fed cut, these are short-term catalysts, all right? They do not drive trends. If you're into some kind of trading, this is not the place for you, right? Whenever you see a Fed cut. When we're looking at global macro context, all right, you want to look at what's also going on with ECB from the Euro side, right? The Euro Central Bank is very cautious, and you could start to see how they price in some of their positions, depending on where and how that happened, right? If you're looking at ECB, you want to look at inflation persisting. What really happens? Does a euro liquidity zone interact with the USD strength? You could check all that using the seasonal tendencies. You want to look at currencies, look at the USD, break it down to 2, 5, 10 years, see what's going on. Are they in the same direction? Pretty much, yeah. We have the 5-year crisscrossing the 20-year, and the rest are kind of on a down. So these kinds of confirmations when it comes to the dollar. For example, if we had the rate cut and we had a lot of crisscrossing of some of these 2, 5, 10 year, then we would need to dive a little bit deeper, right? If you're looking at the Japanese yen, you ask yourself questions like, what is happening to the yield curve? If the yield curve control continues, it affects USD, JPY, and cross-asset flows, right? And you want to check out the right asset, USD, JPY. Go check out the OTC. Open up the chart. Check out what really happened. You see these big moves, and we have a lot of volatility on the lower time frames, but don't lose context. The bigger picture is very important. You might find a very big move on a lower time frame, but on the bigger side, the bigger picture, you see actually the opposite. So don't get confused by that. So we have a very big move down, and this was all caused due to the USD being the rate cut, right? Now, if you're looking at China, very few people actually trade the yen. However, we do, and we're actually profitable because of the volatility. I remember I told you to check out your ATRs. Look at your daily true range, right? Look at your volatility index. Check out some of these pairs that are very volatile. You don't have to stick to conventional trading pairs. We move where the money is. Now, the emerging markets, for example, in China, growth support versus capital outflow pretty much means that the USD denominated debt is very sensitive to Fed cuts. Now, when you come to Forex particularly, you don't want to complicate life, right? I've mentioned over and over to take charge of your risk, especially using the risk calculator on pocket options. All you have to do is press the percentage. I always stick to 1%, and it will show you immediately what the dollar amount is. When you're using expirations, very important to understand, again, the sentiment and how long you plan to be in the trade. You cannot scalp on such big news releases. You get burnt. Okay? And with the development of algorithmic trading, it's getting harder and harder right now to manually trade. You see, you're working against some of the best minds in the world. There's lots of high frequency trading going on, a lot of bots. There are latency issues. Your brokerage in the middle is kicking your ass as well. So you end up finding yourself that you're at the bottom of the barrel, right? And your best tactic now is to be very patient. And the only thing that's going to save you is time. If you understand what time actually does in the market, you know how to identify some of these inefficiencies, then you can make a back. However, you have to manage your risk as always. So going into 2026, putting all this in your mind and understanding where we are and where we're going. If you look very closely, we have some new regulations coming in. We have the crypto basket going to be regulated. Keep your eyes all on the Clarity Act, the Clarity regulations coming in. We've already seen the bill moving forward, being pushed. So where they're pretty much going to shift the understanding of how conventional, traditional finance is working, right? There's a lot of loose money. They want to tighten the bolts, right? You see transparency in corporate reporting, shifts in institutional flows and a lot of money. Understanding where the money is moving to is very important. So having that in your mind and being open-minded to new trading strategies, being very adaptive, being able to understand that some of the strategies that worked, say, 5 years ago will not work today. We also have the digital ID, the CBDC initiative, where you see new transaction rails, capital mobility, and liquidity implications. We also have the ESG and green finance mandates, where we have portfolio rotations and end-of-year positioning and so forth. So position these structural changes, right, as drivers of liquidity, volatility, and opportunity. Right now is the time to sit back, right, reduce your aggressive take on the market. You need to be very capital and risk averse. Understand that we are entering a very volatile, if not one of them, it could be one of the most volatile times that we've seen in the past couple of, ever since the financial crisis, right? So you want to have that. You also want to have a nice strategy whereby you are not all balls all in, say, on one asset class. Those are for long-term positions. You want to look at how we'll be moving on Q1. So all eyes on Q1. Seasonally, as we head to the end of the year and the start of a new year, we usually have flash crashes, and these flash crashes really affect everything. You want to close some of your positions, take your profit, right? Leave some of your eggs, distribute them, diversify your portfolio. It's very important to keep some liquidity, right? You want to have some liquidity ready for any action, and tie back to Fed rate cuts, right? You see, even small rate shifts like the one that we saw this week, from 4 to 3.75, well, they magnify effects in structurally evolving markets, right? So don't take this as a joke. It's very serious. If you're smart enough and you understand where the market is, where you are, always ask yourself, where am I right now? Currently on a long term, on a bigger picture, in the middle, looking, and then you can scalp. Because honestly, scalping, if you're scalping and you're staying in two positions, if you find yourself repeatedly staying in the same position over and over, and it starts to affect your emotional side, then there's something you're doing that's not right. Okay. Now, Fed cuts, you need to be able to check out this release calendar. All right. This release calendar is pretty straightforward. If you look at Wednesday, there are some selected interest rates. This is the best side to stick to some of the latest speeches and so forth. And it actually has a live link to what Chair Jerome Powell says. Okay, at 8 p.m. you have to calibrate your times to New York time zone. Now regarding today, I think we've done quite well. We've had a whopping 100% profitability in my group. There's no need to rush. We don't have anything serious on the fundamental side. So we've had, by the way, we have 2 more sports left. I want to share with you, if you could go to your dashboard and look at treasures. I have a big giveaway that I'm doing. Okay, and here are the instructions. It's between 8th of December 2025 to 28th of December 2025. There's some treasure giveaways. We have a PlayStation 5, we have an Xbox Series X, have a Steam Deck, an iPhone 17 Pro Max, a Lenovo Yoga, a MacBook Air, a Samsung Galaxy, a PlayStation 5, etc. So there are a lot of gifts. About over 300 gifts will be sent, and these are the steps you need to take to participate. You need to tap the button on the promo code page to enter the giveaway list, top up your account, and if you've already made a deposit in 2025, you're already participating. So there's an automatic randomization algo that we'll be using. Read through the terms and conditions. You could check out all the prizes here. And that's pretty much it, guys. This giveaways, it's a way of sharing, a way of giving back to the community. For those of you that have been here for a while, I think you have higher chances of getting some of these gifts. Alright guys, now when it comes to seasonality again, you want to check this. It's a simple website, Market Bulls. Always keep this in your mind, right? If you break it down, you want to see how some of these pairs actually react just by using this seasonal tendency chart. You could be able to correlate, and you already, trust me, you're already 50 times better than somebody just using technicals, for example, right? You are way ahead of somebody just using technicals. Reason being is you already kind of have historical data, right? For example, you have the USD. You understand that towards December, we usually have that on the 2-year. We usually have that decline, right? And then you factor in the Fed cut, and then you pair it with a pair like, say, on the other side, because we looked at Canadian data. If you've been following, we had the Central Bank of Canada rate statement. Okay, overnight rate, we'll look at overnight rate next time. But employment cost index fell to 0.8%. Now if you correlate that, for example, just by a quick eye visual, and you look at Canada, you see the opposite. You see that on a 2-year, Canadian dollar gains strength, right? So naturally, we have the USD, naturally, from this just seasonal perspective, right? The USD losing strength, Canadian dollar increasing strength. However, we have the rate cut on both sides, right? We had the employment cost index. Employment cost index, what is the impact of employment cost index? You have your journal, you understand what's going on, and then we could correlate and see what really happened. So what you want to do is open the USD card on the daily, right? So as much as the employment cost index dropped a little bit, don't forget that we came out from last week. You want to go back, right? Go back and look for the Canadian unemployment rate. Now this is very important, guys. Look, employment change, we went through this, was a whopping 53,000. We had unemployment rate at 6.5%. This was already strong. So having that background information, that understanding that Canadian dollar was somehow stronger, despite the fact that we had a drop, right? Comparing it with the US dollar seasonality, and we get the drop. Now, you want to be very careful so you're not caught up in these bullish candles, right? That's why it's very important to look at the overall trend. Look at these key psychological areas where we have support, where you have resistance. Look at the pullbacks. Now, this is pretty much how you could, this is one way how you could do it. You also have the court report data. Check out the court data. Look at the commercials. We've gone through this multiple times. We've looked at what really goes down with court. Court is a very big one as well, just to keep an eye. There's a whole series that I've done on court analysis. Okay, and that is one way you could also check that. Look at small traders. Open interest is a big one as well, and open interest, you could check open interest on the bar chart website. Okay, bar chart website is a great way. So this is pretty much how it's done. Now guys, we have come to the end. We are at the sweet spot, so it's 4 minutes into 9. We want to be very vigilant. Let's move to the trading community. Check out my Telegram. Let us wait for some opportunities. I need to get to the main desk right now and be super focused. Don't forget to use the promo code once again. It's a great way to get started if you're a newbie. Check out my new videos that I release, and see you guys in the next amazing live stream that I'll be having. Stay safe out there. Remember to manage your risk accordingly. And that's it, guys. If you have any questions, feel free to always write to me. Cheers.